Hi, Scott Nelson, Senior Wealth Manager with Boulay Financial Advisors, with your economic review of the fourth quarter and a look at the big economic themes of 2022. No doubt the top economic story of 2022 was inflation reaching a 40-year high when the Consumer Price Index peaked at 9.1% in June. The inflation rate has been gradually declining since, but the price index was still 6.5% in December. Still, it's its lowest level of the year and the first time below 7% since 2021. The Federal Reserve's response to the inflation situation was the other big economic story of 2022. The Fed raised its influential Fed funds rate from virtually 0% at the beginning of the year to over 4.25% by December. That's its highest rate since early 2008. During the fourth quarter, the Fed increased the rate 0.75% in early November and then followed that up with a 0.5% increase in December. Markets took the smaller increase in December as a signal that the Fed was nearing the level it felt was necessary to tame inflation. Still, Federal Reserve Chairman Powell cautioned that the Fed did not expect to be done raising rates until mid-2023 and did not foresee any lowering of interest rates until 2024. The Federal Reserve's Fed funds rate only applies to banks, but its influence can be felt on interest rates of all kinds. You see a good example of this with mortgage rates. Mortgage lender Freddie Mac reported that the average 30-year mortgage rate was still under 3.5% in early January, but quickly rose to over 2% by May, in anticipation of what the Fed would do. 30-year mortgage rate neared nearly 7% early in the fourth quarter, but finished the year around 6.5%. The impact of the increase in mortgage rates was a bucket of cold water on the housing market. The National Association of Realtors reported that home sales fell for the 10th straight month in November and that the annual level of home sales was now 35% lower than it was 12 months previous. The median home sale price, though, remains at approximately $370,000 due to the low number of homes for sale. The bright spot in the economy remains the jobs seen. Unemployment in December was still a very low 3.5%. After a year of very strong hiring, the past few months have seen a return to more normal levels. And those levels remained healthy but trended downward in the fourth quarter as businesses remained more cautious about adding to their payrolls. How the economy fares in 2023 largely depends on how businesses and consumers grapple with the higher interest rates and lingering inflation. Retail sales stayed relatively strong throughout most of 2022 despite high inflation, but that strength faltered in the fourth quarter as retail sales dropped 1% in November and 1.7% in December. Business profitability overall was also relatively strong in 2022, but with weaker consumer spending and higher costs of borrowing, it seems unlikely that businesses can match those numbers again in 2023. The silver lining of all this, of course, is that this is what the Federal Reserve's goal is, expecting that a slowdown will bring inflation to an acceptable level before 2023 ends. So that's your economic review for the fourth quarter of 2022. As always, if you have any questions or concerns, reach out to your Boulay Financial Advisor. If you're interested in learning more about Boulay and Boulay Financial Advisors, please contact us at learnmore@boulaygroup.com. We hope your 2023 is off to a good start and good things await you in the new year.